Tushar Mahajan, Head of Derivatives with Nomura India, joins us. Tushar, good morning and good to have you back. Tushar, this week's price action is more constructive. It's more bullish than bearish. Do you think we have a trading bottom in place in our markets? Slowly but gradually, are they poised to go higher?
Well, I think more than bullish, we are kind of, inching towards the higher end of our range. My sense is, what we've seen over the last 3 days, we saw the Nifty move up 1%, then we saw the Nifty move down 1%, and then we've had a strong day today so far as yet. This entire move hasn't been accompanied by a spurt in volumes, and that's a bit, distressing. Cash turnover continues to be in the $1.5–1.7 billion range, which is way lower than what recent averages of lower volumes that we've been seeing. So while yes, there seems to be for now a trading bottom in place, but are we poised to inch higher and break out of the range that we are stuck up in? I think that's a little too early to say.
Tushar, hi, morning. The one big drag on the market and impediment, so to speak, has been the banking pack. What is it that you foresee for the bank Nifty? Because barring the trading rallies of late that we've been seeing, it's just in a complete bear market territory.
Yeah, and for a while, the index hasn't really done too much, pretty much stuck around 10,000 on the lower side and about 11,500 to 800 on the higher side. We are right now in the middle of that range to about 10,600 odd or so where it's trading currently. But I think unless it's pretty much similar to what we're seeing on Nifty as well. Nifty is stuck up at about 59.80 to 50 on the downside and about 61.40, 50 on the upside. Pretty much that, but if you have to, if one is looking at really putting on trades, we've been discussing this for such a long time, that it continues to be a trade which is, more a relative trade between the private sector banks versus the public sector banks, and I think that's a theme which continues to play out. In this market, it's best to, given that there are no really trading zones which the market is breaking out, best to, play those ICICIs and Axis on the long side versus some of the PSU banks on the short side.
That's a relative trade, but is private banking not an absolute long trade?
Tough to say when you don't have a constructive, clear constructive view on the market. The fact of the matter is that the private banks constitute about 50 to 60%. Juxtapose that with the fact that the bank Nifty is really stuck in a range. The moment it kind of tries to break out of that 11,500, 800 odd levels, there you see selling coming out, and the range has been narrowing over the last few trading sessions. So, as an absolute trade, we are still in a non-trading zone, and I won't want to just go naked long on the private sector banks yet.
How much more for IT to go before it tops out? Just like trees cannot go to sky, IT stocks cannot going up on a daily basis.
Well, that's true, but they seem to be, leave aside a few days here and there, but, the overall trend there is buy. So if you really have to look at an absolute trade, probably, IT continues to be that wonderful IT trade, a wonderful absolute trade that continues to play at this market and, also contributes to the index in a significant way.
So out of the three instruments, which is Nifty, the bank Nifty and the IT index, which is one instrument you would like to buy for a 5–7% appreciation?
From current levels?
From current levels.
Like I said, Nikunj, we have to get out of the trading range. When was the last time we saw the Nifty, move beyond 61.50? It did briefly on Wednesday, I think, and, it was all given up away. So there is no hurry to, just go naked longs, because that's not what my view is. My view continues to be that, we are stuck in a trading range unless accompanied by a breakout in volumes on the upside for Nifty beyond the 61.50 levels, which it is able to sustain. We won't, recommend just going naked long right now.
And Tushar, that's precisely the point, right? That 6,200 is acting at such a tough resistance mark for the Nifty and a big headway at that. Do you see the index, knocking just 50 points higher than now anytime soon, or do you think it will take a big fundamental trigger for the market to move higher?
It will take some trigger, either locally or globally. Right now, we have no global triggers, we have no local triggers. Even the, SPX is trying to move out to all-time highs and all of that, and kind of meet some resistance, still not able to, sustain above that on a sustainable basis. So globally things aren't really, I wouldn't say supportive, but there's really no triggers globally. And even locally, we are past all news flow, we are past all, we're past all earnings and everything, and remember that there is a big event which is coming up over the next 2-3 months, so investors are going to wait and watch how that pans out before, really taking those fundamental calls on India. You have to be watching out on the volumes yet,
How are you monitoring the FII activity in the F&O space?
I think broadly speaking, the trend has been that FIs have been, more hedged, I would say, rather than just being long. We've seen almost 6-7 days now of constant buying on the cash space, but at the same time, we've seen some reasonable position build-ups around the 6,000 odd levels on the puts, and now we'll begin to see that moving on to the March series as well. So people are worried that the markets could crack in the absence of any kind of a global global meltdown or global news flow which kind of begins to happen. But locally, I think people continue to monitor, as a local event, people continue to monitor what's going on the political space.
Tushar, while we've got assessment of the Nifty range from you, let's talk about the pocket of strength. And the pocket of strength clearly is Pharma. Lupin, you got Dr. Reddy, and you got Sun Pharma. Are you long these stocks?
Yes, we quite like these names. We have a relative preference also, led by Lupin, followed by Sun Pharma, and then Dr. Reddy at current levels. But we continue to like the space, and between the three, large cap pharma names, these are the three names that we continue to trade on.
Do you technically like them? Are you bullish on them fundamentally? And if you like them, do you have a ultimate price target in mind for a Sun Pharma or for a Dr. Reddy?
I think right now it's more trading on these names. We would begin to start taking profits on Dr. Reddy at these current prices. Lupin is something which we hold up for a longer period of time, and Sun Pharma around the current levels also will kind of continue to trade. Technically, I think Sun Pharma looks interesting at this point in time.
So in the trading book which you manage, and if that's okay with you to discuss, what's your largest position?
We'll hold off on that right now. That's proprietary information.
But what's the bias of the trading book?
Overall, I think we are, if you look at the overall position at this point in time, we are slightly longish bias, but I would still say that, it's more neutral than, clearly long. It's just that, price adjustments make it slightly more longish at this point in time, but largely we've got our pockets of, strength, like I mentioned, the IT space, the pharma space, the private bank space, versus there are enough pockets that we kind of continue to, on the capital goods, which is the industrial space, public sector banks, which hedges our short book.
Tushar, how would you approach auto ancillaries? They've been the ones which have been pretty lively this time around, the likes of Bharat Forge, Motherson Sumi, etc. Anything that you like for a trade?
Bharat Forge, as a house, we like the stock. We've been pushing the stock, and that's one name that we continue to be bullish on even at these current levels. Largely.
370 rupees for Bharat Forge. Let's superimpose today's intraday graph with the 1 month change, with the 1 week change, with the YTD change, and it is a marked outperformer. Cut it anyway, any which way, pick up any time period in last 3 months, and you will just see a very smart outperformance there. This year, Bharat Forge is up 13%, and in 52 week the stock is appreciated by 68%. Rhythm Desai this week gave us very nice logic why he likes Bharat Forge, and his logic was this is one company which will benefit because of global auto demand and will also benefit if the Indian CV market turns around. So it's a bit of a global story and a touch of domestic cyclicality as well. The other stock which I want to discuss is Tata Motors, and this time around Tata Motors really has moved in the background, so to speak. With all the hullabaloo about China, Tata Motors is almost at 400. Tushar, Tata Motors was a trending stock till about a month ago. that trend is over, volatility has kicked in. Do you think Tata Motors will struggle once again to go past 420, 420, 425?
I would think so. I think so Tata Motors is really, again, like you mentioned about Bharat Forge, really a global story to play on. The stock's done extremely well over years. First led by China, then led by the US. Now we are seeing a soft patch of data coming in from both these countries, and that's going to kind of hit data coming out from Tata Motors. I think 420 odd ends up becoming a strong resistance for the stock. On the downside, you start seeing buying coming in around the 370, 380 odd levels. So my sense is that Tata Motors now, given where it is trading, currently around this 400, 395, 400 odd levels, will probably be a trading stock for a while within this range until, we see some improvement in data coming in from the US and Chinese markets.
So Shah, it's getting increasingly difficult to trade the metals pack purely because of the kind of, variation in news flow that we're seeing from China. Yesterday you got a weak PMI data and, all the metal stocks back home were down. How would you approach the likes of, say, Tata Steel right now?
That's been a tough trade, really. We played the first leg of the move about a few months back when, when the stocks inched up from about 270 odd levels, went all the way to 320, 350 odd. But ever since that, the data has been so mixed that it's really difficult to trade. At current levels, around the 370, 375 odd levels, it's tough to say whether there is more downside to the name because you have seen the stock technically, move to almost about 400 odd levels. So it does, tempt you to buy at these levels for a trading buy, but I think given the huge volatility in overall data that we are beginning to see, it's one of those sectors which we've, for the moment, kept away from the book.
Tushar, appreciate your time and thank you for joining us. That was Tushar Mahajan of Nomura India, outlining that why he's bullish on pharma, and as a group he still prefers private banks over PSU banks for all the basic reasons.